Is Nordstrom's 4.95% dividend yield safe? I'm going to answer that question in this video, looking at a few of Nordstrom's financial metrics to determine if this dividend yield is safe or is at risk of being reduced or paused or worse, being canceled. So let's begin. Of course, Nordstrom's 4.95% dividend yield comes after Nordstrom had to pause its dividend payment during the pandemic because it was unsure how long the business had to remain closed temporarily and all of the uncertainties that arose during the pandemic. So, now that Nordstrom has reinstated its dividend, investors can get a 4.95% dividend yield with Nordstrom stock, which is quite robust. So let's check it out and see if that's sustainable, if it's safe, or if it's at risk. So the first thing I like to look at when I'm looking at sustainability of a dividend yield is the payout ratio. And the payout ratio measures the percentage of earnings per share the company paid out in dividends. The percentage of earnings per share it paid out in dividends. So if this number is smaller, that means a company is spending less of its earnings on dividends. If it's larger, that means nearly all of its earnings are going out as dividends. Now, if you want sustainable dividends, if you want dividends with the potential for growth, you want companies with lower payout ratios. Nordstrom has middle of the range, 48.57% payout ratio, means the company keeps half of its earnings for reinvestment and pays out half of its earnings as dividends. A solid 50-50, near 50-50 ratio suggests it is on the more reliable end of the spectrum. But there's more to consider. The next thing I look at is revenue growth. Annual revenue growth for Nordstrom has been relatively flat, growing modestly, except for the fluctuations during and after the pandemic. That's understandable. And 5% in its most recent year. Of course, Nordstrom has two major business segments, right? It has the higher end Nordstrom full price stores, and then it has the lower end Nordstrom rack stores, which I feel is better set up for current consumer trends. That's really popular right now. The off price discount shopping like Nordstrom Rack, like TJ Maxx, Burlington, Ross, those kinds of stores are popular right now as consumers are gravitating towards them. So the fact that Nordstrom has, a considerable amount of business coming from that segment is putting it in a good position. It benefits from the highest end shoppers. It also benefits from the bargain shoppers. So it's got a nice balance in its business model, which I appreciate. And the last thing I'm going to look at here is the earnings per share over the trailing 12 months. Remember, when I looked at the payout ratio, I said the payout ratio measures how much of a company's earnings it pays out in dividends, and the lower percentage, the better, right? Well, if a company increases its earnings per share and it keeps its dividend the same, then that lowers the payout ratio. Or if a company increases its earnings per share and it keeps the payout ratio percentage the same, it can increase the dividends per share over time as earnings per share increases. It's not unlike a household where, let's say, you have a budget to spend 80% of your income and 10% goes to savings and 10% goes to pay off debt. Well, if you increase your income and you still spend 80%, you can spend more money, right? Because your income increased. So 80% of $10,000 is higher than 80% of $5,000. So that's where earnings per share is important for dividend stock investors, because a higher earnings per share means that a company can pay a higher sustainable dividend. And so with Nordstrom, not so good here in this regard. Going back 10 years, Nordstrom's earnings per share have trended downward. Even though there was big fluctuations during the pandemic, even if you exclude that, it's trending downward over the long run. And, partly this was the impact of Amazon and changing consumer behavior, consumers shopping more online. And I believe for the most part, the worst of that is over. And you could have seen that around 2017 when Nordstrom was on a nice trend increasing its earnings per share before the pandemic. And I suspect it can be on a similar trend with modest earnings per share growth over the long term because I believe the business has stabilized. I don't believe Amazon is going to capture that much more um, market share from apparel retailers. I think whatever it was going to capture, it has already captured, which was a significant amount. And I think apparel retailers have kind of stabilized themselves. They found a way to use digital channels themselves to increase consumer convenience, and their shoppers have liked that. So overall, to answer the question, is Nordstrom's near 5% dividend yield safe? I want to thank the Motley Fool for sponsoring this video. Visit fool.com/Parkev for the 10 best stocks to buy now. I would say yes, it's on the safer side. So if you're a dividend stock investor and you're attracted to Nordstrom's dividend yield, I would say it is on the safer side of the equation on the spectrum. So yeah, you can feel good about investing in Nordstrom stock for the dividend yield. All right, that's all I've got for this video. Thank you so much for watching, and I hope you'll join me again for another one of my videos.